in listen-only mode.
Good morning, everyone. Scott Earhart with Insurance Agency Marketing Services here. Do want to thank you all very, very much for taking time this morning to join us. I think you're going to be really, really excited about what you're going to see. I'm really excited about what we're going to get into today. Today we're going to look at Athene and some new product that they launched last week, as well as some enhancements they made to current product line. And I can tell you right now, before we even get into any of that stuff, they are incredibly competitive across the board. Any fixed annuity type of product, they will compete with, whether it's MIGA, whether it's income, whether it's accumulation, legacy benefits. Athene has positioned themselves incredibly strong here in 2017, and we're really excited about that. And in order to show you the ins and outs from Athene's standpoint, we've got a couple of gentlemen with us today that know all about it. Mr. Mac Campbell, our relationship manager, and Mr. Robert Johnson, who is pretty much our senior internal guy over at Athene. Gentlemen, can you hear us?
I can, Scott.
Yes,
Thanks
sir.
again for having me.
Hey, thank you, gentlemen, for taking time. I know it's a real busy time there, a lot of business flowing your way, so we appreciate you guys taking time for our group here today. Before I hand it over to Mac, let's go through a couple of housekeeping items and then just a few introductory slides, and we'll jump right into the meat of today's presentation. So first housekeeping item is our phone number. You're going to see a lot of stuff today that's probably going to trigger a lot of things for you. You may have a prospect or a client that this may really help you find a solution for. Please don't hesitate to use that phone number on the top left-hand side of your screen, 800-255-5055, and let us assist you with it. Let us draw up some illustrations for you. Let us help you with some case design. Hopefully, we'll be able to come out with a winner for you there. Our staff would absolutely love that opportunity. Of course, we do have the life team and the RIA here as well, creative team. So if there's anything we can be doing to help you in any aspect of your business, please don't hesitate to use that number. Second housekeeping item, polling questions. I've got 2 polling questions teed up for today's presentation. I will launch them randomly throughout the presentation. So they're just yes or no. If you would please take the time to participate in those, we certainly do appreciate that. Questions. You're going to see a lot of information. We don't have a lot of time today, so you're going to have questions. We want those questions. Mac and Robin, the entire culture at Athene is a very transparent culture, and they want you to understand what they're thinking, why they're doing things, why they've priced it the way, how they can price it this way. So certainly, if you have questions about these products or about any of the information that you hear from the gentleman from Athene or from me, please type those in. We will answer those at the end of the presentation, and we really, really do appreciate questions as well. So that being said, that's the end of housekeeping items. We're going to go into a couple of introductory slides here, and then we'll hand it over to the Athene team, and we'll get to take a look at some of this great new product. New producer bonus. If you are new to insurance agency marketing services, or if this is your first introduction to us here at IAMS, you will be eligible for new producer bonus. This is based on production within your first 180 days of being licensed with IAMS, and as you can see, there are 3 great levels. You can cash in at any one of these 3 levels, and you've got great options at each level: cash bonuses, business building tools, personal perks, all available to you. If you'd like to learn more details about how this program works, or if you want to know where you stand as far as new producer bonus qualification, let me know. Of course, if you want to have a conversation about what we might be able to do to help you make that step up to the next level, I'd certainly love to have that conversation with you as well. Creative team, I mentioned them a little bit earlier, Josh and Adam here in-house. We call them IAMS Creative. These gentlemen are incredibly talented, and they do such a great job for our producers, and it's something that we probably haven't promoted enough. So I'm going to take just a couple seconds here. We're going to talk about IAMS Creative. These guys can do everything that you could possibly need to help you increase your brand and deploy more marketing. And we can do it all here in-house in Omaha, and basically do it for you significantly more cost effective than what you could see from a local graphic design firm or a PR firm, advertising firm. Anything from basic basic marketing with brand building and logos to websites to even television creation and deployment, we can help you with that here. Josh and Adam have an intense marketing and creative background, so they've got the tools to do it. We certainly want to help you grow your business, grow your brand, create a larger natural market for you, and we'd love the opportunity to help. If you'd like to learn more about creative services and what our team can do for you, please give me a call or feel free to call into the office. Again, that 800-255-5055 number, and just ask for Josh or Adam. They'd certainly love to chat with you about what we can do to help you there. Life and Annuity Academy. I'm going to spend a little bit of time on this slide. And as I spend some time on this slide, I'm going to launch our first polling question of the day. And what I'm going to ask you in this polling question is if you'd be interested in our Life and Annuity Academy. Now, if you click yes, it's not a commitment to attend on your part. It's just going to get you onto our interested parties list. That'll make you the first group contacted once we do have dates for our next academy. Also, it will generate an automatic email out to you where you'll get some more descriptive information about what we do in our Life and Annuity Academies. That being said, normal structure for a Life and Annuity Academy is we'll fly you in on a Wednesday, fly you home on a Friday. We'll have an evening session Wednesday night after you get in, full day Thursday, morning session on Friday. Hopefully have you on a plane or back in your car by midday and get you home in time for dinner is normally how we structure that. Now, what we do with our Life and Annuity Academies is we'll bring in our internal staff. Here from IAMS, you'll meet myself, Mark Raymakers, who's our life director. We'll have a member of the creative team there. We'll have normally someone from our new business team to talk to you about what we can do here internally to help you increase your business, help you increase your closing ratio, and expedite you from the submission of your application to policy delivery and commission to you. I'll go in depth into income riders and placement of income riders within a case design, where some riders may fit a better niche than others. We'll dissect all of that and show you how we would do that here in-house if you called us on the phone and what we'd be looking for to help you understand where a product may fit better than others. We'll also go real in depth into all the volatility indices that are out there. There's just a ton of them nowadays. I want you to understand how those work, where some may be better than others, and we don't lean to one carrier or another. I'm going to give you the truth of the truth on those and how they can be better placed. We'll go into annuity structuring, how you may be able to help more than just an individual through utilization of annuities. Mark does a great job in his presentations. We'll look at things like legacy benefits by utilization of single premium life. Of course, we'll go into IUL, multi-generational gifting, overfunding of the IUL to create that tax-free retirement concept. We'll also look at some personal finance through whole life options that are available to you. Go real in depth into using fact finders and uncovering more assets, how to position those. One thing that I do want to point out that I think is really unique about our academies are Steve Murray and Charles Hiring. They're our executive and ownership team. We are a privately held company, not owned by anyone other than Steve and Charles, and they're very, very active in our business, and they'll be there. They want to know you. They want to get to know you and who you are and how you market yourself and what type of business you write and how you go about that, so we can make sure that we're tailoring your experience here at IAMS to meet your business needs. I think it's really unique. I hear a lot of other our competitors out there where their principals aren't very active in the day-to-day business. You will meet the decision makers here at IAMS and you will have access to them, and they truly do want to know you and your business. What I think is the most valuable of anything that you'll see in our Life and Annuity Academy is we'll bring in at least 4 of our sales coaches from throughout the country. Now, to be a sales coach here with IAMS, you not only have to be able to talk the talk in front of this group, but you've got to be able to walk the walk in your daily practice as well. Our sales coaches are top producers. They've qualified for multiple top producer escapes. These are the top 1% of our industry. And what these gentlemen and ladies will do is show you exactly what they do in their daily practice that makes them so successful, and give you the ability to take that home with you and implement it into your daily business. Now, before I move on from the Life and Annuity Academy, I'd be remiss if I didn't ask Mac for any comments he'd like to add. Mac's been a partner with us on several academies and will be in the future. Mac, anything you'd like to add?
Yeah, thanks for the opportunity, Scott. Yeah, for those of you on the call that have not attended one that IAMS puts on, I'd strongly recommend that you talk to them about that and getting signed up for their next one. You know, as Scott mentioned, we've had the opportunity to partner with them on several of these over the last couple of years anyway. And, you know, selfishly from my perspective as an Athene representative, you know, any chance, any time that I can get in front of producers and get those producers in front of our senior management, that's a win for everybody. But from your perspective, you know, I think the most valuable time, and Scott hit on this, but just to reiterate it, I think the most valuable time and the most valuable stuff that you'll get out of these meetings, again, from your perspective, is the ideas and the sharing of information that happens and goes on with one another there. You know, these are your colleagues. I've worked in this business almost 20 years, talking to producers and IMOs and representatives and agents, and there's no one way to succeed in the business. And you get a whole bunch of producers in a room from all over the country willing to share how, you know, they got to where they are, share their successes, share their failures. That's just a great opportunity. So very collaborative. Again, please consider attending one of these academies if you haven't. I think it's well worth your time. Scott, again, thanks for the opportunity there.
Hey, thank you, Mac. We've always appreciated you and Athene's partnership in these, and we look forward to continued partnership there. That being said, I know we spent some time on this slide. I'm going to close down the poll, so if you haven't taken the time to just click yes or no, if you would please do so, we certainly appreciate that. And that poll is now closed. Thank you, everyone. Paperless contracting, do want to make sure everyone's aware that here at IAMS, we are on the Efficient Forms platform. We will give you access to online licensing so you can add carriers with a lot of ease. If you'd like to talk about how that works, Chris Mount, our licensing director, would be more than happy to chat with you. I'm pretty familiar with it. Love to have that conversation with you as well. Our website, IAMSinc.com, definitely check it out. We put a lot of tools out there for you to make your life easier. Links to carriers, our product grid is available to you. Annuity quote engine, life quote engine is out there. A lot of great tools so you can, if you don't want to call into the office, which I highly don't recommend, call the office. We're great. You'd like us. But if you want to do it on your own, if it's a weekend, if it's late at night, feel free. IAMSinc.com, a lot of things there available for you. So please do check us out there. Okay, this is my favorite slide in any presentation. If you've been on a webinar, you've heard me say that, but I love this slide. Marketing reimbursement on the right-hand side. Rough numbers on marketing reimbursement. Every $100,000 in fixed indexed annuity premium you place through IAMS, $200 goes into your marketing reimbursement account. This is really, really lucrative for you. And why we think it's more lucrative, or why I know it's more lucrative than any of the competition out there, is because we don't put restrictions on your marketing reimbursement account. You can grow that account as large as you would like to. You can use any vendor you would like to use reasonably. And of course, you can cash that out whenever you need to. We're not going to put a timeline on that. So marketing reimbursement is a great way for us to partner with you in helping you grow your business, and we want you to take advantage of it. If you'd like to know how much is in your marketing reimbursement account, or if you'd like to learn more about how the program works, please let me know. That's a great conversation to have. Left-hand side, referred producer program. Our business here on the wholesale side of the industry is really, really similar to yours out there in the field, in that the best lead we're ever going to get is a referral from one of our valued producers, or you, our valued producer, our valued clients. So we want to make it worth your while to refer individuals to us. When you refer a licensed producer over to us and they pick up any license that IAMS offers, and we offer, I want to say right at 55 different carriers right now, we're going to send you a check for $50. Just a thank you for the referral. We appreciate it. Where the real money comes in is as your referral writes business, we're going to give you a 20 basis point override on that business. Steve and Charles sign these checks at least quarterly. They do sign checks for thousands and thousands of dollars at a time. I see those checks. It's my job to call and follow up, make sure you received it. So there's a lot of money to be had there, a lot of money available to you. Simply for referring an individual over. That being said, if you know of anyone that you think may benefit from working with IAMS, certainly in the questions box, type in their name, any contact information you have for the individual. I'll do the best I can to get them recruited over here to the IAMS family and hopefully get you on your way to earning some referred producer dollars. That being said, I believe, that is the end of my prepared slide. So what I'm going to do is give control to Mac. And Mac, it should be jumping over to you now.
Okay, great. Thanks, Scott. And if you would, just verify that you can hear me okay, and then I just started up the slideshow there, so if you can see the slide, let me know that too.
Absolutely. We can hear you great, and I can see the slide. Absolutely.
Great. Thanks again, Scott, for the introduction and those comments. Again, thank you, everybody, for joining us today. We do have a bit of information to cover. Some of this may be covered ground, so I'm going to try to focus the bulk of the time on some of the new stuff that we have. We're going to kind of talk about a couple different things. We're going to spend the bulk of the time talking about the new changes to the indexed annuity portfolio, including one of the newer products that we have, the Ascent Accumulator. We'll talk about the Ascent Pro, which is now really our income play. I'll kind of highlight what changed there. Before I get into that, though, I will start out by talking about, just very quickly, I have slides to back this up, but just if you have questions on this, call my team or call the folks at IAMS on Scott's team. We did reprice our multi-year guarantee annuity. It's now called the Max Rate product. We did strip some of the liquidity away. We found that most people buying multi-year guarantee annuities really buy them for the rate, not necessarily the liquidity. It still does have good liquidity. We have a 3, 5, and a 7-year version, only an MVA version that allows us to get better rates. Right now, our 5-year product, just as for your information, is our sweet spot. We are at 2.8% guaranteed for 5 years on that product. If you look at the competitive landscape, there might be a carrier or two higher. Typically, though, they are lower rated. They're on B paper, so 2.8 should be right about near the top when it comes to A-rated carriers like we are. And as you know, with AM Best, we're A- again with positive outlook. So take a look at that if you haven't seen it. If you're selling multi-year guarantee annuities, just know that we're very competitive in that space, 3, 5, and 7 years. In particular, the 5-year is I think our play right now. So let's switch gears and we'll get into the indexed portfolio and really, again, what's new over the last couple of weeks. And you see the slide there. We're going to focus on what your clients want most. We've got income solutions, protection, accumulation, and then new really to us on this side of the product line, legacy solutions as well. So I think you'll like what you see there, particularly when it's paired to the product that we will discuss in just a short while. So again, as I mentioned before, if you've attended one of these conference calls before and you've seen the Ascent Pro series, what you have known from that product is that the Ascent Pro has optional income riders that you can choose, either a guaranteed one or a stacked one. The key change here, everybody, on the Ascent Pro series is now we've decided to make this our income play. So what that means is the income rider is no longer optional. So the client has to either choose option 1, which is guaranteed, or option 2, which is stacked. Now we'll quickly step through the differences in those two riders now that they are mandatory. But I do want to show a brand new client-approved piece that you can help explain stacked income to customers. And I think it does a great job doing that. Rest assured, though, if you've sold one of these in the past without the riders for perhaps accumulation reasons, we've got a great product there too. So that's where the accumulator version of the product will fit that hole. So we're focusing strictly on income right now. And again, we believe that this product line, the Ascent Pro, can provide income for every different customer or prospect you may have, regardless of age, regardless of their time frame. We've got guaranteed options, as I mentioned, sort of those pension clients, maybe for customers that are a little older. And then we've got stack roll-up options that really provide a ton of value if you really do believe in indexing, and I think many of you likely do. We've got a choice of income payout options. We've got level options, inflation-protected options, options that will increase based on what the index does. That's called our earnings indexed option. And then again, we'll close with some enhanced features as well that we can discuss. So we believe this is one of the most versatile products that includes income riders. Again, we've got two choices, and really this is chosen at issue. The choice has to be made, however. I want to reiterate that. This is not an optional income product. This is a mandatory one. So as I mentioned before, two choices the client has at issue. Option one is our pension product. That's our guaranteed growth rider. It grows up 10% simple for 10 years, and then 5% simple for another 10 years for a full 20 years of roll-up. Again, competitively, if you look at the landscape, there's not a lot of products that roll up that long anymore, and we've got a full 10% simple year 1 through 10, and again, half that year is 11 through 20. Option two, and this is where I'm going to share with you that client-approved piece. Option two, we've changed and we've enhanced it so that in the first 10 years, the customer is still going to get 8% simple worst case scenario. So there's an 8% guarantee for the first 10 years, and that drops to 4% that second 10 years. Now, on top of that guarantee, any year they have indexed growth, we're going to multiply that times 200% and stack that on top of that guarantee. So said another way as an example, let's say the client earns 3% in year 2. We know they got their 8% simple guaranteed. That 3% doubled is 6. We're going to add the 6 to the 8. That means in that year they get a 14% roll-up. So you can see how it doesn't take a lot of growth in the index to really make that option 2 sing. Regardless of which one that you choose for the customer, on the bonus version of the product, there's an immediate 5% income-based bonus that's attached. And if you're selling the non-bonus version, if you have a broker-dealer situation that requires a 10-10 play, we have a non-bonus 10-year that has a 3% income bonus right out of the gate. That just means that your 100 will be 103, or in the case of the bonus product, 105 right out of the gate, and that's what your rider will roll up to. Just further enhances that growth of the income in those early years. Now, before I get going a little further, I want to actually step out of the presentation for just a brief moment and bring up again, this is a new piece that we've developed that is approved for customers that talks about option 2. Why would you choose a stacked rider over the guaranteed rider? Now, we know that the guaranteed rider it can be a simpler story, but once you see these numbers, again, I think you'll be remiss to at least not mention this to your customers. And what I'm going to do, this is a couple of pages long. I'm going to actually start from the second page here at the bottom. And what you're looking at here, through a couple of different issue ages and durations, is our guaranteed. Again, that's that 8% simple that I talked about, is on the far right. And you can see that we've chosen, in the last 30 years, we picked the average 10-year period, the worst 10-year period, and then the best 10-year period to reflect what the income would be in each one of those situations. So if we have a 55-year-old individual and they are now 65, guaranteed it's 92.10. The worst 10-year period still would return an income of 96.81. The best would be almost 12,000, and the average would be right in the middle, about 10.8 or 10.9. So the reality is, over the last 30 years, the S&P has not returned less than 1.4% over any 10-year period. So now with that in mind, let's go to the first page here. What this chart basically does is show the likelihood over history how often option 2 would have outperformed option 1 versus, based on a number of different deferral years. So if we look at even at the end of the first year, over 3/4 of the time, choosing option 2 would have outperformed option 1. Once you get into years 2, 3, and 4, it's almost a virtual certainty that choosing option 2 would have done better. And in year 5 and beyond, it is a certainty. 100% of the time, choosing option 2 would have worked out better. In other words, provided higher income to the customer than just your simple guaranteed option. And we're assuming here, by the way, the 10 worst years in the last 30. So we're not cherry picking the numbers to make this look better. This is worst case scenario. And incidentally, we're also choosing our annual point-to-point traditional strategy, and we're assuming a 3.5% cap rate. So 3.5% cap, worst 10-year period, and option 2 beats option 1 virtually in every instance. Just food for thought. If you're not comfortable discussing option 2 versus option 1 with prospects or clients, I think this is a great tool to help them understand what value could be had in choosing option 2 versus option 1. And think again, we're going to talk about different strategies here today as well. If you choose an uncapped option, these numbers look even more dramatic, more favorable, that is. So with that, again, this is client approved. We've got one of these for each version of the product, the bonus, the 10-year, the 7-year even. Call the folks at IAMS or call my sales team. We'd be happy to send you a bunch of these to share with your customers or your prospects. So with that, let's jump back into the slides and we'll continue here. Again, here's just some quick income numbers on option 1. All this does really is reflect that no matter how old the client is, how long they defer, if you're selling guaranteed income, option 1, we're going to be very competitive. If you look at the different spreadsheeting tools that are available out there, we should be top 3, 4, or 5 in almost every instance. So there are some carriers that are tackling listen, our product is not great until year 10, and then we're going to kill it. We've decided to take a different approach. We'd rather be really good in a lot of different cells than the best in one. So just know that you're not going to have to go back to the spreadsheet every time and figure out where we fit. The reality is we fit in a lot of different scenarios. Again, option 2, you can see some numbers there as well. We shared a little bit on that piece that we showed a moment ago that's client approved. Here again, different issue ages and deferrals. We've got what our guarantee would be. The worst 10 years, the average, again, the best there as well. So that's deferral. Again, that's our income play, mandatory choice at issue. Either they want guaranteed income or if they want stacked income, they choose option 2. Once we are ready to take income or turn the income on for the client, that's when the next decision is made. So the first decision is at issue, which rider do I want? The second decision comes when they take the money. Do they want a level income that's predictable and will be the same every year? Or do they want some sort of inflation protection? And we've got two choices in that vein. We've got the inflation adjusted income that's based on the CPI-U index that increases up to 10% in any given year if the CPI does that year as well. Or we've got our new one, which is our earnings index. And this is my favorite. This is the one that will still use indexed growth to enhance their payment each year. I think we are doing our customers a disservice if we assume that we're going to keep providing them level income. Right now, we know inflation has been historically low. I mean, gosh, over the last 2 decades, it's been below the 100-year average. But if you've heard me before on a call like this, I'll say it again. I apologize if I'm a broken record on this, but I'm passionate about it. I'm a huge believer in cycles. I think everything in life is cyclical. Unemployment, the stock market, inflation. So that means, at least in my mind, if we've been below the 100-year average historically in inflation for the last 2 decades, we're bound to see the pendulum swing the other way at some point in the future. I'm not suggesting it's going to happen soon or even the next 4 to 5 years, but if you've got a 65-year-old that's going to live 30 years in retirement, that's a lot to commit. 30 years of level income to me, I would not feel good about that. I'd want some sort of inflation hedge. And if you're not going to choose an inflation option in this product, make sure you address it somewhere in their portfolio. So here's what the earnings indexed could do for the customer. So here we've been deferring for a number of years, and now they're 65 and they're ready to take money. You can see the guaranteed level will pay them $94.30 every year forever. So after 25 years, they've received almost $227,000. That's a good deal. They gave us $100,000. We're giving them $226 guaranteed. However, what if inflation rears its head? Will that $94.30 in year 18 or 24 feel like $94.30 did today? I would venture to guess that it will not. Even if inflation is low, it's still going to eat away and erode at that purchasing power. So alternatively, if we choose the earnings indexed option, you can see that out of the gate there is a haircut. So instead of $94.30, we're getting roughly $8,100. There's about a 65 basis point haircut. But for that, we have the ability to earn money when the index performs. And you can see that based on our back testing, in years 5 to 6, $94.30 again as our guaranteed level. We've got $96.53. So we're surpassing our level guarantee despite the haircut we took out of the gate in just 5 to 6 years. And if we use back testing and we use the illustration here to our advantage, to the customer's advantage, you can see that over time it really adds up. In year 25, instead of $94.30, they're likely getting over $16,000. And over the grand scheme of things, instead of the $226 they would have received guaranteed, they're getting potentially over $300,000. Now, it's not guaranteed, but again, I believe the market does what it should over longer periods of time, and I think most individuals will benefit by having the earnings indexed option at least available to them, at least give them a choice once they're ready to take income. So that's the income story. A lot of information in a couple of slides there, so give us a buzz after the call if you want to talk more about it. We'll talk about some enhanced features, and then I want to switch to the accumulation play that we just launched. We do have a minimum interest credit, no matter which one you sell, and really all that says is if they give you $100,000, at the end of the 10th year, we're going to make sure they earned at least 1% a year, so they're going to walk away with $110. It's just a sleep at night feature. There's no fee for that. We also have some bailout provisions as well that effectively says if we set a cap below what we say the bailout is at issue, the money is liquid, so the client can walk with no charge. And it is liquid as well in terms of liquidity provisions, 10% free available each year, including the first year. We also have our income doubler. Those of you that have been selling with Athene and the predecessor companies like Aviva or American Investors or Ameris probably know this very well. Those of you that are new to us, we were the first to have some sort of nursing home protection built into a rider. This was over 13 years ago, and we still have it today. Basically, if your customer is confined to a qualified care facility for 6 months over a 250-day period, we will double their income for up to 5 years or when their value hits zero. There's no underwriting. This is included in the cost of the rider, which we'll cover in a moment. Again, it's when costs are growing for customers when they go into a nursing facility, this will help keep up with that cost. I will say just really quick though, I mentioned qualified care. This is not home health care. This is not assisted living. This is a true nursing facility benefit. Here's our approval map for the bonus product. A lot of different colors here. Dark blue is the product we just discussed. If you're in one of those states that requires their own version, one of the yellow states or the red state down there, Florida, you know who you are. You know that likely products are different for you no matter what you're selling with any carrier. We've got different charges. Generally, the rates will be the same, but the bonus may be different as well, again, as the charges there. So call the folks at IAMS to get this product for state-specific version details. The 10-year non-bonus and the 7-year non-bonus version of this product are approved nationwide with no variation. Here are the rates. A lot of numbers to look at. I'm not going to spend a ton of time here. Just know if we look at the bonus version of the 10-year products on the far right there, a lot of opportunity to grow money. We've got 2-year point-to-point uncapped strategies. We just launched 1-year versions of the BNP and Morningstar. But for those clients that don't want to wait 2 years to see growth, you can give them a 1-year version of it, which is great. And again, keep in mind, any index they earn, we will double for option 2 via that 200% participation rate. So a lot of opportunity to really, really enhance your customer's income. The cost for the rider is 1% across the board. Doesn't matter if you choose option 1 or option 2. And again, that 1% includes the dollar that I mentioned as well. Here are the specs, issue ages, essentially up to age 80 across the board, up to $1 million, as little as $5,000. If you have a client with over $1 million, let us know. We will likely accept it. We just need you to fill out a large case form just to go through some sort of pricing underwriting, if you will, and we'll let you know what we can do there. And you see the surrender charges there at the bottom of the screen as well. So again, a lot of information covered. We've got about 10 or so minutes left. In the remaining time, before we get to questions, of course, I want to switch gears and talk about accumulation. So for the last 10 to 15 minutes, we've discussed the Ascent Pro series. That is our income product. Again, that's no longer optional. That's our income product, either guaranteed or stacked. So what if you sold an Ascent Pro in the past without the riders? You've obviously sold it for accumulation reasons. What do you do if we make it mandatory to choose the rider and a client doesn't want one? This is when you sell the accumulator version of the Ascent. It's just simply called the Ascent Accumulator. There's a 5-year, a 7-year, and a 10-year non-bonus version of this. Before I get into the product, I don't want you to get the impression that this is taking away from our Performance Elite series, which if you're familiar with the rest of our portfolio, you know the Performance Elite is a heck of an income or accumulation rather play. The Performance Elite will have things that this one does not. So these, I believe, will live side by side in perfect harmony. The Performance Elite's got one of the biggest bonuses available in the industry today. It's got an ROP feature, return of premium, and up to 20% liquidity in any given year. So for clients that need more liquidity, return of premium, or for your transfer or exchange business where you need a bonus to offset surrender charges, the Performance Elite will continue to be your accumulation product of choice. Now, we price the Ascent Accumulator a little differently. There is no bonus here. What you'll see in a few moments, it's amazing what pricing you can put back into the product in the form of rates when you remove a bonus. So if you have clients that don't need exchange, don't have to offset surrender charges, maybe there's money sitting at a bank or a money market fund, this is a really vanilla play, but I think the rates are about as high as you'll see in the industry in any product across the board. So again, a lot of numbers to look at here. For the purposes of this call, let's focus on the far right column. That's our 10-year version of the product. You'll notice that it is banded at $100,000. So if we look at the high band, if we look at our 2-year point-to-point BNP strategy, which is one of the most popular strategies we have, client gets 145% participation. No cap, no spread. If it's less than 100, they still get 120. There's not much of a haircut there. Now notice I told you before that we added a 1-year version of that index. That's the third one down. So on an annual 1-year point-to-point BNP uncapped index, we're giving them almost every bit of the growth, 95% participation rate on a 1-year strategy. That'll be about as high as you will find in the business today. Now, for those of you on the call that remember the days, again, I've been in the business for 15 to 20 years in this space, and I remember selling indexed annuities back in the early 2000s where we had caps of 6+%. We're almost there. For those of you that like traditional strategies, let's go about 2/3 of the way down this chart here. The 1-year point-to-point, your traditional cap, 1-year point-to-point with the S&P 500 high band has a cap of 5.75%, almost 6%. Again, I believe that'll be about as high as you'll see in the business today. And the monthly cap at 2.2, again, same thing. The fixed account on this is 2.75 on a 1-year basis. That's huge as well. We'll skip over the 7. I don't mean to skip it to say that it's not worthy. It totally is. But let's look at the 5-year space for a minute. This is an amazing multi-year guarantee alternative. Again, let's look at the 1-year point-to-point cap on the high band for the 5-year product. It's 5.25. That should be the highest you'll see there, I think, anywhere. Again, look at the participating strategies above as well. So again, clearly removing a bonus, what we did is we put this back into the rate. So again, if you have clients that are interested in rate only, this is the play, I think, and I think it's probably the most competitive product you'll see in the marketplace today at accumulating money, particularly in that high band. So issue ages across the board, 85 in the 5-year, 10-year is 80. Same parameters in terms of premiums, 10% free, liquidity available all years, including year 1. The last thing we'll cover here on this accumulator version of the Ascent is an optional death benefit rider. So this isn't an income rider. Like, again, the income play is the Ascent Pro. So if you want accumulation, great. Well, a lot of clients like accumulation, but might be interested in some sort of legacy protection as well for their beneficiaries. And there's an optional rider, this is not mandatory, that can be added to the 5, 7, or 10-year. Is available to people up to age 80. And basically, this will guarantee for 10 years an 8% simple interest roll-up for death benefit purposes until the earlier of 10 years or they reach age 85. Any of you on the phone call that is familiar with our Benefit 10 product, we've sort of stolen a feature on that rider to add to this one. We actually have dollar-for-dollar withdrawals up to the greater of the RMD they may have to take, or 5% free withdrawal. That's a big deal. Most other death benefit riders you see, if the client takes money out of the product, it comes out on a pro rata basis. And that really eats away at that benefit base a lot quicker than dollar for dollar. So just run the numbers, have the folks at IAMS or my team do it for you. This is a heck of an RMD play. There's only a 2-year waiting period to take advantage of this death benefit account. It will pay over 5 years in its entirety if you want. There is a lump sum version as well, and we'll talk about that in a moment. The cost for the rider is 95 bips until it stops accumulating, then it's no charge from there. Of course, if for some reason the client dies within that 2-year period, we'll refund the charge because clearly they didn't take advantage of it. So very client-friendly and, frankly, beneficiary-friendly legacy rider here. In terms of the payout, I mentioned the installment payout. The benefit base is going to be paid out in equal payments over 5 years. Again, that 8% roll-up over 10 years is pretty powerful, guaranteed. If the client wants a lump sum, works a little different, they can get that, but it's going to be a discounted amount. We're effectively going to take 50% of the base contract death benefit, their accumulated value, plus 50% of whatever the benefit base is, and that'll be their lump sum. So in this example, you can see the chart down there or the graph. The benefit base is 200. They gave us 100. If they pass away, they can get $200,000 to the beneficiary over 5 years, or they can get 150 in a lump sum at one moment. So you can see that, that there is a haircut there, but clearly the better the base contract death benefit, the more money they accumulate, the less of a haircut that will be. So just to quickly summarize, and then Scott, I'll turn it over to you, and I'm happy to open it up for any questions we have from the group. We did quickly talk about our max rate multi-year guarantee. Great rates, give that a look. We've got one of the best, most competitive income products available in the Ascent Pro. Whether you're looking for guaranteed income or stacked income, please give us an opportunity to quote you a rate. I think you'll like what you see. And then, of course, the brand new addition here is the Ascent Accumulator with among the highest rates, if not the highest rates in the industry today. So we look forward to talking to you all more about this. And at this point, Scott, why don't you go ahead and take control from me, and we'll address any questions in the remaining time.
Fantastic. Thank you very much, Mac. Appreciate you giving us that presentation. I do have control now. I do see a couple questions have come in, so if there's any more questions while I'm chatting here real quick, feel free to type them in. We'll absolutely, we've got a little bit of time here, so we will get to all, if not the vast majority of them. And before we get into those questions, I'm going to launch our last polling of the day, just asking you if you'd like contracting and product information from Athene. If you click yes, we'll get licensing agreement, commission structure, as well as information on the Ascent accumulator emailed out to you here today or tomorrow. So yeah, feel free to participate in that. We certainly do appreciate everyone's participation there. That being said, let's get into some questions here. Not sure if we hit on this part, Mac, or not, but does the product require a 1-year wait for income, or can it be taken earlier?
No, that income, and Rob, if you're still there, maybe verify for me, but I believe the income is available right out of the gate. I think it might be a 30-day wait on that, but it is available for immediate income.
Yep, it absolutely is. So it's a pretty good option there. And it looks like we've got an Allianz producer on here with us, or someone that's familiar with Allianz. And I don't know if you've done the creative or not the competitive analysis on this, Mac. If you haven't, we can certainly do it for you, sir, here in office. How does this compare to the Allianz products as far as payouts and ultimately payout to the client?
Yeah, I appreciate that question, and as luck would have it, Scott, we have done that competitive analysis, which was very helpful, certainly to me, and again, I was glad to share that with anyone on the phone here. So got to make sure we're comparing apples and apples, right? So when I think Allianz, I think they listen, they do a great job, and they excel at their participating income. So typically we're not worried about too much of a guaranteed play. They're more of a, whether it's 365 or what I believe is the more popular version, the 222 on that. What you will find, apples to apples, if we're looking at our option 2 stack rider to theirs, we should beat it in every cell. In other words, our guarantee, so our worst case on the option 2 is pretty much industry leading. And there's not many carriers, and I happen to know that Allianz, the 222, we do beat them as well on the stacked income benefit. So if you're comparing an illustration on the 222 versus the Ascent Pro with option 2, you should see that we outperform them based on our back testing and the strategies that we have there. So again, call the folks at IAMS 2 to see some comparative analysis there, but you should see that we're among the top carriers in performance when it comes to stacked income, regardless of who you're comparing us against, but certainly the Allianz products as well.
Absolutely, absolutely, and yes, as Max said, we'll be more than happy to do that competitive analysis for you on a personalized basis. We can certainly, if you've got a case you're working that you're looking at Allianz, we can certainly run you illustrations with any of their products as well as the Athene, and show you how Athene does stack up. And as Max said, I didn't realize that they had it readily available, so thank you for that, Mac. But when you rolled it out, you were kind enough to show us some stuff, and we knew they'd be competitive. So absolutely, beating them is great. So we'd love the opportunity to illustrate that for you. Moving on, Mac, I know the ready answer to this, but I'm going to give it to you and then follow up and see if there's anything further. Are these products available in New York?
They are not. They are not, no. So a couple things with regards to New York. We do have, New York is very careful in their cross-border sales, and because they are careful, so are we. That's not to say that you can't do it, just we do have a non-resident form that's got to be completed and filled out accurately, so keep that in mind if you're selling outside of New York and doing cross-border stuff. Really, that frankly holds true for any state, but particularly for New York. We are looking at some point here in the near future putting together a multi-year guarantee product in New York that should be competitive, but nothing available yet. So just stay tuned for that.
Okay. My follow-up question to that would be, I mean, Athene obviously has Athene New York. They operate in all 50 states. Athene New York operates in New York. Athene National operates in the 49 others. And I know New York's Department of Insurance, awful tough to get product approved with, Mac? Any chance you guys are going to file for index in New York?
Man, it's funny that topic comes up almost annually with our product development folks, and we've never said let's not consider it, but I wouldn't hold my breath at least for this year. New York is a different animal. Because they have this mandatory comp structure that's very limiting. It's tough to price product to be compelling for everybody involved. The client, the producer, and the company. That's not to say it's not possible. We know there are a few carriers that have product there. We just have not used that as a priority as of yet. I think what you'll see before we dip our toe in the index New York market is we'll get that MIGA there, and then we'll see how that does and kind of go from there. But again, I wouldn't expect anything in New York in the index space, at least for a year for us, perhaps longer.
Sure. Well, I appreciate the transparency and the candor on that. Final question. I've lumped a couple of them together here. I'm sure you know it's coming, Mac. Any commentary that you could provide on the Department of Labor situation?
Yeah, that's certainly a very fluid situation, as we've seen. So I think, clearly the current administration, let's wind back the clock 90 days or the end of the year. I think people were in a much different space when it comes to thinking about the DOL and will it happen or will it not. I think if you go back to that time frame, the industry and anybody on this call would likely think, oh, it's happening in April. I feel like each week that goes by, that looks less and less like a reality, which is great. But nothing guaranteed yet. We saw that, like any other incoming administration does, they put a sort of a 60-day hold on any pending legislation or bills, which is what the Trump administration did. Frankly, that's like what the Obama administration did back when he came in initially as well. All that means is they're going to take a look at every pending piece of legislation and bills, review them for the merits, and go from there. So, does the 60-day hold bump the date back in April? Not necessarily, but it certainly gives the administration an opportunity to look at the bill or the rule and decide what they like and don't like. And I think there are many people that believe that this will likely get delayed, which is good news. Now, again, that's Mac talking. The position from Athene is still one of which we are preparing for both eventualities. We're ready from a DOL compliant perspective, from a technology, from a product, from a pricing perspective. We're ready to go there. If for some reason it does get delayed, good news. We'll be ready to go there as well. So we feel better about where it might be headed than we did 3 months ago. But I think until we see something from the administration that says this is being delayed for any length of time, we're going to still kind of hope for the best but prepare for the worst. So again, not a lot of information. Everyone I talk to about on the DOL, because there is so much gray area still, I feel like every time I talk about it, I don't really come up with anything new, but I feel better about it when I talk about it. So hopefully you guys do as well on the phone. But just know that I think industry-wide, we feel better today than we did 3 months ago. So with that, I'll kind of leave it at that, Scott. And if you want to chime in as well, feel free.
Sure. I'd echo Mac's statement. We do feel better today than we would have back in October, November, even into December, which is good. But the administration has not said anything publicly about what they're going to do. Advisors to the administration has. Nothing official has come out from the administration. So please remember that as you see articles and examples out there. And I think Mac and Athene's stance right now is the absolute perfect stance that should trickle down from a carrier to us here at IAMS to you there in the field. It may not happen. There is a good chance it gets delayed, and who knows what happens if it gets delayed. But until that becomes official, if that becomes official, we must prepare as if it's going to go in place. Because the one thing you don't want to do is hope for a delay, and then come April 10th, all of a sudden you can no longer work with qualified dollars. If you have not found an outlet for you to be DOL compliant, i.e. someone will sign the BIC for you, a institution will. There are outlets out there. There are carriers out there. There are things you can do where you can become the fiduciary. All sorts of things out there that we can help you prepare for. And ultimately, should, if you choose to go down that path for your business, should open up avenues to you to not only stay at the same income level you're at now, but give you an opportunity to grow your income by that. So we'd certainly love the opportunity to talk with you about what we can do here at IAMS and how we are helping our producers to prepare for that. And certainly the one thing I would tell you to take away from this, besides give us a shout here at IAMS and give us the opportunity to chat with you about it, is keep abreast of the industry, of what's going on there. Make sure that you are looking to resources so you are informed on what is going to happen, and make sure the information that you're looking at is real information and not necessarily just marketing information or anything of that. So that being said, we don't have any further questions. I do want to thank Mac for his time. Mac, I know it's a real busy time for you guys there at Athene. You guys are writing tons of business right now, so thank you for giving us an hour out of your day. Any parting words for the group?
I'm glad to do it, Scott. Thanks again for having me. Always enjoy these webcasts with you guys. And for those that have joined us today, again, take a look at the portfolio we have. I think no matter who you're speaking with, in terms of your current block of business or new prospects, we've got a great solution for you to look at. Look forward to working with you, and have a great day. Thanks, Scott.
Hey, thank you, Mac. And as we do sign off, I know asking an hour out of all of our attendees on today is a big ask. An hour spent with us here online is an hour where you're not out prospecting or closing sales. So we do greatly appreciate that, and we value your time. I thank you all so very much for joining us. I look forward to speaking with you in the very near future. And if there is anything that we can be doing here at IAMS to help you close another sale or earn your business here, if we're not already doing so, please don't hesitate to give a call, 800-255-5055. Go out and have a great sales day, everyone. Look forward to speaking with you soon.